Hi, we're back and we're still talking about insurance. It's a huge topic and it's a topic that we need to seriously understand before you sign any dotted line. So this is Money Wise with Rina Hicks, where we create, grow and preserve wealth. The last show we looked at two different kinds. I think we looked at term insurance and we also looked at endowment policies. I'd like us to just break this down a little further so that we understand when we have the options before us. Am I taking term life? Am I taking endowment policies that have a savings element? What am I doing? And what are these endowment policies? So I have Alex with me back again to discuss it. And so Alex, I think the first thing I want to understand is, okay, so there's term life, but I've also had discussed something called whole life. And then there's endowment policies. Could you please just describe the different options so that we know what they are? Yeah.
Okay. Now, they come from the very simple to more complex. So you have two lines of insurance, what you call of life insurance. There's what you call pure life, and then there's the endowment policies. Now, pure life means the only asset that would be realized is if you died, right? So there is no, investments in it and this kind of thing. If you die, a payment is given to your family. Now, the other one, which is endowment, means that if you die, we'll pay a sum assured, but if you live, we'll pay you a sum assured, a certain amount which comes from investment. Okay, so if you die or you live, there is a period within which, if you survive to that point or you die during that point, we are going to pay
so a certain number of years.
Yes, there is a period.
Okay.
Yes.
Okay.
So again, the simplest is now in pure life. What is term life? So term life has two forms of coverage generally. Pure life has your term life or your whole of life. Now, what does that mean? Term life means you're covered for a defined term for a defined amount. Okay. So if you pass away within the next 10 years, your family will receive 1 million shillings, 500,000, depending on what premium you could afford.
All right.
So you could actually go all the way to some significant amounts that are paid to, business people and very prominent people take very heavy covers on themselves.
Okay.
So it's really what you can afford. So if I die with this period, my family will receive this amount, which is fixed, and those conditions are known. Now, when you come to whole of life, it's an extended, term life. So we say instead of it being 10 years, is if you die within maybe 20 years, this would be paid. Otherwise, if you died outside the 20 years, this is the other amount that would be paid. So for the whole of your life, you have a cover from the day you die. Now, what happens is that the premiums are the ones that determine what you want, because also the affordability is different. Term life is really the cheapest form and the most basic, but then when you go to whole of life, the premiums, then as you also become older, there are changes in premiums, just to make sure that, as I told you before, insurance is about covering unknown risks. So as the risk of death becomes very obvious, obviously the premiums will tend to go higher. So these combinations that you make, and insurance companies, you need to ask them clearly to explain to you when you meet with the agent exactly how does the whole of life work, so that anytime I die, there will be cover.
Yeah, but it sounds very expensive. But we'll talk about the best options.
Pricing.
So the last one is endowment policies. What are these?
Now, endowment, think of it as a fund that you're putting away for the family.
Yes.
Okay. So beyond, you see the premiums that are paid give you only a certain level of coverage in terms of insurance if you die. It's only up to a certain level. If you want to enhance it, you have to start contributing something, because the insurance company is only willing to cover up to a certain point where they take the risk for you. Beyond that, you then use it, you top up as a savings on top of it. So there is a fund now, so that if you died, the insurance element would kick in. If you're alive, the investment element would kick in. So they have an insurance and investment element going along.
You know, I am so allergic to those two words coming together. I find that they are not compatible. Investment and insurance, Alex, they don't go together.
Yeah.
Because if I'm investing, I'm looking to reduce my cost, maximize my return. When I add insurance into it, I'm increasing my costs. So are we talking about investment here, or are we talking about saving, where endowment policies are concerned? And so therefore, should I be looking at an endowment policy if I'm looking for insurance, life insurance, sorry, or should I, so my question is, should I just go for a pure life insurance product that covers me for, say, term insurance, if that's really what I'm looking for, or should I go for endowment because of, I don't know what reason you will give me, but what choice should I make?
Well, Rina, there's no one size fits all.
Okay.
Because what you're describing is, you know, when somebody gets to a point where they have some extra exposure on investments and the returns and this kind of thing, and they have the time to manage,
Okay.
then maybe I can go and start buying and selling and trading and all those things. Most other people don't have the time or knowledge to expose themselves to investments.
Okay.
So endowment is an entry point into investments.
Okay.
So yes, the returns may not be as aggressive, but it's also because they cannot take too much risk with that portfolio, because it will materialize that they need to pay. So they can't take a lot of risk.
True.
Now what you're defining is somebody wants to take some extra risk, and that of course fits somewhere in your portfolio.
Okay. From what Alex has said, you have a choice depending on your circumstances. But for me, I honestly think, from my layman understanding of what we've just understood and listened to, that I think the better option, if you were to ask me, is to take a term life insurance. But that's just my opinion. Take a term life insurance policy and then invest separately from your insurance policy. That's my view, Alex. I'm sorry. And I'm sorry to anybody else out there and all the agents I know, but that's what I believe and I think. And so anybody looking for insurance, I think, please, if you take an insurance policy, in my view, this is Rina's view, you should not combine insurance with investment. If you want to invest, invest knowing that you have invested. If you want insurance, take an insurance policy and keep it that way. Because otherwise, then if you combine the two, you end up not benefiting from both, and you kind of have an average kind of performance on both your portfolios. You have insurance, yes, but then it's not the best policy you could get because it gets too expensive. And then if it's investing, you're investing, but then your investments are not doing as great as they could because they're being dragged down by the cost of this insurance policy, is my understanding of this issue. So please read the the fine print, if it's still there, or these documents come with so much information. I would suggest that you take time to read through all this documentation, understand it, research, talk to different people. Once an agent comes and sees you, yes, talk to them, but don't make a decision after having spoken to one insurance company or one insurance agent, because the products are different, the products vary, the understanding of the products also varies, because you find that there's insurance agents that are clueless and just want to sell, and so for them they'll sell you the policy that earns them the highest agency commission. And so it's good to take time to first understand what is your need. Number two, what policy addresses your need the best, and lastly, what company will give you the best rates for what you want covered. I wish you all the best. Send us questions. I'm sure I can get Alex to come back to answer a few more. Is that okay, Alex?
For sure.
Yeah. So please send us questions, subscribe, email us, sema@moneywise.co.ke, send us an inbox message on Facebook or on Twitter, and we'll be able to respond to you and address any questions that you may have. This is Moneywise with Rina Hicks, where we create, grow, and preserve wealth.